What happens if China suddenly dumps its US dollars? Well, imagine waking up to see mortgage rates spiking, grocery prices soaring, and the stock market in freefall. This isn't a movie script, it's one financial move away from becoming real. Welcome to our deep dive into what could happen if China, which holds around $775 billion in US Treasury debt, decides to dump the dollar. This is one of the financial nuclear options in the ongoing US China trade and geopolitical standoff. But how would it actually impact you? China is the second largest foreign holder of US debt, just behind Japan. If it were to offload a large chunk of its treasury holdings, either to punish the US economically or diversify into other assets like gold or yuan-based reserves. Here's what could happen. 1. Bond yields spike. US treasuries rely on global demand to keep interest rates low. If China dumps bonds, the supply floods the market. The US must offer higher interest rates to attract other buyers, pushing mortgage, car loan, and credit card rates up across the board. 2. Dollar weakens. A massive sell-off signals declining global faith in the US dollar. The dollar loses value, imports become more expensive, and inflation rises, even if the Fed keeps rates steady. 3. Stock market plunge. Spooked by rising interest rates and a weak dollar, Wall Street could crash, especially in sectors reliant on cheap borrowing like tech, housing, and retail. So what does that mean for the average American? Before we talk about that, if you like such content, do not forget to like and subscribe. So how will the average American be impacted? First, more expensive living, higher rates equals higher monthly payments on everything: homes, cars, and student loans. A weak dollar equals costlier imports equals grocery and gas prices go up. Second, more jobs at risk. Companies facing higher borrowing costs cut back on hiring or lay off staff. Exporters may benefit from a weaker dollar, but the damage to consumer-driven industries would outweigh it. Third, national debt spiral. The US has over $34 trillion in national debt. Higher interest equals higher debt servicing costs, equals less government money for programs like healthcare, education, or defense. Here's the twist. China doesn't want to crash the dollar. Not yet, anyway. Doing so would devalue their own reserves and risk global financial instability, including damage to Chinese exports. But as tensions rise over Taiwan, trade, and tech, the risk that this nuclear option could be used as leverage is growing. If China dumps US dollars, everyone feels it, from Wall Street to your wallet. It's a financial game of chicken. And so far, no one's blinked. Think this could actually happen? Or is it just a geopolitical bluff? Drop your thoughts in the comments.